Yo, what's up, guys? I'm running you through my live trading. It is the 22nd of November, and I want to run you through what I'm looking at for the GOAT strategy, which is my strategy number 3. That's been playing out really well lately because we are in an uptrend. Okay, so first and foremost, GBP JPY. I want to show you my iceberg stuff, okay? For strategy 3, we have a break in a downtrend, lower consecutive tests, a pull and break above those tests, or a pull and retest of the final pivot point, which would be here, right? And then we are selling, anticipating a leg down. Now, this is not the entry that I wanted to get, but it put the pattern in on a 1 minute, so I took it, and I will show you why. This is what I took earlier. Same situation. We have a break, a retest, and this was the test. It pulled above it, but it was technically a trade 3, strategy 3. We get a short signal. We put our stop initially over the structure, and we target the low. As it confirms, we move our stop down, and we consistently get a 3 or 4 to 1 doing this. Okay. Again, we put in a pivot order block, consecutively lower attempts, a reattempt that breaks or comes even, and a sell-off. So again, selling here, stop here, target lows. Right? As it confirms, we move our stop down to the high of the pivot. Great risk to reward. Okay, tests, lower tests. I was waiting for a retest of this area, and what happened is same situation, lower tests. We swept the high. We had volatility in this area, which is a nice accumulation thing to see, right? Aggressive attempt up, sell off hard. Aggressive attempt up, sell off hard. Aggressive attempt up, sell off hard. So as I see this, this is when I looked at the computer today. I sold here, and when I was looking on a closer time frame on the 5 minute, I had this orange gold bar sitting right above here, which is previous buys. It's a buy iceberg, but when you're underneath it, I've noticed that it acts like great resistance. So I've started to utilize that, and that was right at the top here. So I had my stop above the iceberg like this, and I adjusted it. I got out some profit and then break even here. As we broke above, I took this trade and I had my stop like this. As we pushed higher, I moved my stop up. Because of the spread on GBP JPY, it hit my target, didn't get me out for profit in reverse, and I came home and noticed I was stopped out for a loss. And this was the setup I was waiting for, because here we have the this is the primary, but this was the secondary area I was looking at. I wanted to see a break above this into these areas in this order block and a clean rejection, and that happened. However, I wasn't there to catch it. Instead, I saw it dumping right here. We were getting ready to break through this. It corrected above this buy side liquidity right here, this iceberg, and then it pushed down below it, and I was anticipating that we might actually just reject. So this is where I sold. It was a sketchier entry, but initially my stop was above 800. And if we zoom in, you'll see that we have resistance here, 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 and here. So I gave this a lot of room. This wasn't a great trade per se because I got a late entry, but I said, okay, if it pulls back up into here and rejects, I will take another position. I will average down and then move my stops up when it confirms. However, it did confirm, and I moved my stop up to here. So now we're in a great trade. My TP1 was hit, which is a 2 to 1, and I've set an alert underneath these bars to let me know that it has in fact started to continue lower, and that's about to trigger. Boom. So we're doing just fine on that, and I wanted to just look around for other strategy 3s to show you guys, and here is an outstanding example. And let me go into the 5-minute to show you a little bit better what I'm looking at. Aggressive sell-off, and we pull up in 1, 2, 3 lower attempts. So what does that mean? That means that this fair value gap, I guess you could say, or potentially all the way up to here, is acting as resistance. So I saw that this did exactly what I wanted it to. We see a buy trap. It pushes up and starts to fail. And then my favorite thing is when it makes one more attempt and fails, because that seems to be like when things speed up. And again, 1, 2, 3 lower attempts. I want to see a pull on liquidity as it attempts again, and then I want to see a rejection. We get a rejection here, and we could have just sold right here and put our stop above this gold iceberg for an attempt to break the lows. As it pulls back up and fails again and starts to confirm, we can just move our stop down like so. Actually, we can move it above these gold bars right here, these new icebergs that have acted as resistance. Corrected above, corrected right below. Came back up, respected it, put in a new order block, and look at this outstanding trade right here. And guess what? We've done it again. I am not in this trade, but I'm just showing you how powerful this is, because it retested this and tapped into it perfectly tapped into it, and it's just dumping, and we've gotten an outstanding risk to reward on this. And just like that, continual red bars. This is speeding up. There's no doubt in my mind that we would have made money on this trade. Will it break the lows? I don't know. We've been in a downtrend for a few days. Maybe it's time for us to finally reverse, but where's liquidity? We have, and with my strategy, I always look for 1 and then 2 liquidity zones to be taken out. Otherwise, I will not remain profitable. If I'm always looking to take profits off at the first liquidity zone, that tends to be less than a 1-to-1, right? Right? We sweep lows, that's a 1-to-1. But we sweep these lows, and now that's a much better RR. So we could take profits here and move our stop. And honestly, guys, I would not leave my stop this high, right? As this starts to come down, if it breaks this low, I'm just gonna move my stop up above the pivot, all right? I wanna protect my capital. So now this is already a 3.45. We've taken the liquidity, we've taken 50% off of the trade, and no matter what, we're making money on this trade, okay? And then our final target is just a sweep of the lows. And if we look at GBP JPY, we're about to hit our target. And we actually hit the target, okay? And I will show you my trade history on the 1 minute here. And I got in, and then I got out for a $190 loss. And I was like, I shouldn't have just gotten out. This may actually hold the level, but you can see here I sold and bought it back, and then I immediately sold at a worse fill. I took profits here and here, and then finally, boom, it hit my yellow line perfect. My TP is hit, and I am out of the trade for a win. And that is London session. And I will piggyback on this and talk about what I like to see on London session. So let me just draw it out for you. I like to fade the short-term trend against the long-term trend and then buy up the long-term trend. What I mean by this is, where is the thing where I can draw? Here we go. Okay, so if we have a long-term uptrend, okay, in Tokyo session or New York session or London session, doesn't matter, has started to push the trend down, let's say. And then Tokyo session, particularly Tokyo session, spends the entire session pushing up. If I see London in an uptrend sweep the lows of Tokyo session within the first hour of London session being open, so between 3:30 and 4:30 p.m. UTC +8, which is Bali time, I will look for a correction. Okay, I'm always looking for this. And if I see that there has been a big volatility move, liquidity has been swept on the first hour, hour and a half of London session, I will then look for reversals, but only if the overall trend is up and in the first hour, hour and a half, we get that sell-off and it pulls liquidity. Then I will look for a reversal to take the market back up, okay? The flip side to this is how we do this in a downtrend. We have overall downtrend. Tokyo has pushed it up. It's come into a structural point and I am looking to take it short. And I see that pre-market London or right around Tokyo close, we get a break like we did today on GBP, JPY, and then London corrects it. Okay, if London corrects it, I will anticipate that we will continue in the direction. All right, but I am looking for a correction. I want to see London manipulate the price and pull liquidity on an obvious level. All right, it's got to be obvious. And if you watch my other videos, I made one this morning where I wasn't speaking because my wife and her friend are talking in the living room. When you see an aggressive bull bar in an uptrend, if that uptrend fails, there are so many retail traders, and this is a perfect example. Where do you think price starts to speed up on the 1 minute? People start to buy the ask. They sell. They're active sellers, right? They're no longer putting sell limits. They're piling in sell orders. Piling. On a pullback, some will sell at the 50% mark or buy back their position. Hey, look at what happens there. People are getting stopped out. Is this active buying? No. These are stops getting hit. All the stops are going to be behind the pivot. And as this pulls up, stop, filled, and then the trend continues. Okay, I am always looking for primary liquidity to get taken out. And this was the example I made this morning. This is a bearish structure with a beautiful buy trap. I see this and I feel bad for people because people are going, we're about to break the highs. It moved so fast into the highs, it's got to break it this time, right? And people are active buying. Aggressive push drops hard. Aggressive push drops hard, okay? I see that volatility manipulation, and I know that we're going to continue in a direction most likely. So I look for a sweep of some kind of liquidity, and I sell. I don't even wait sometimes for confirmation. I just sell because I want to get the best price. And if it continues aggressively moving in my direction, I will usually cut my trade in half and take half loss. And then I'll wait for visual confirmation. And if I do get a visual confirmation, I will put that other half back into the trade and adjust all my stops. But here I took a short, and my first profit target needs to be obvious liquidity. All right, if this is actually going to change trends and go up, and we're going to enter a bull market on the interim, it still needs to pull liquidity. Where do you think that is? Look at that buy bar. Don't you think it's funny that retail traders are taught to buy breakouts? And where was a breakout level here, by the way? Look at this. All right, we get a test, a rejection, and a clean break. All right, so people who are breakout traders, they put their stops here. But as active buyers got involved with the market and it moved into this, they may have been able to hold on long enough to profit from this short-term uptrend. However, the majority of people who are buying are doing stuff like this. They're putting their stop right here, and they're buying on this candle. Buy, and they are looking for a continuation. What do you think they're targeting? Where's the obvious stop? Where's the obvious liquidity? Where's the obvious target on this? Right here. You see this candle right here? Right? That is a pivot right there. Obvious, aggressive sell-off. People are waiting for the reward on these buy candles. Guess what happens? It doesn't happen. Instead, they get short. Some people get short to take this further down, and they get manipulated, and everybody gets stopped out. I got stopped out for break even, but I still took money off this trade. So what did I do? I targeted liquidity, and liquidity is right here. And look at that. It takes it out, Tons of people lost money here, and then it takes out these guys. So the short sellers here got wiped out for a loss, and the long traders, the buyers, got stopped out under this level for a loss. Market manipulation exists, ladies and gentlemen. It's not that they are hunting stops per se, but I have talked to professional traders that trade on the New York Stock Exchange floor. And you know what they said? They said, we don't really trade like we used to. Algorithms trade the market, and the only job for algorithms is to look for liquidity. The computers are specifically set up to identify iceberg orders and to seek those positions out so that they can be filled at a good price and then take the market in the direction that they want. If the market is going to go down, it needs to go up first. So people who are like, I'm going to buy the breakout, that's great, but it's not going to work over time. Okay, here we have a breakout right here. Your stop is here. The trade starts to work out, and you're targeting a takeout of the lows, or you're targeting a 2-to-1, don't get it. Targeting a 3-to-1, don't get it. You decide you want to move your stop up. Okay, how many times does that come back up? Retest, you get slipped out, and then it continues. You're going to drive yourself crazy trying to become profitable just like everybody else, and you're going to learn hard lessons over and over and over again. You have to understand market liquidity, and one of the best ways to do that is to look for a footprint in the market, okay? This was treated like poison. It just pushed away from it, and then as it swiped into it, you could see all the selling volatility. But the market wasn't ready to go lower, so it pushed right back up. Why do you think they did that? People are shorting here. They're getting ready. They see all these confirmations on the 1 minute. They're shorting the big red bars, and then it goes right up and takes out their stop. And then they're shorting. It goes right back up, takes out their stop. And then here it again. Okay, now this is the time. I've taken 2 losses, right? Takes out their stop. Why do you think it's doing that? All right, it's a bearish move, but people are getting stopped out needlessly. 1, you're using too tight of a stop. And 2, you have to understand how the market structure is working. Right? This moved perfectly into the midpoint of this order block where I was waiting for. Look at this rejection area. Okay, this is an order block. On some time frame, this is an order block, right? Look at all the accumulation. Lower, 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 retest, fail, retest, fail, retest, fail, right? We should include the wick of this order block right here. Wick, 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 fail. What does it do? Comes up, taps it. I was long here and I was in profit. I just didn't get slipped out because GBP JPY has a 20-point spread on MT5, which is bullshit. But anyways, ticks people out, dumps. Everyone's selling and chasing, ticks the sellers out, dumps, right? Understand where the stocks actually need to be put. And it's not just above the order block. They are retesting the true order block here. This is not the order block, right? This is the order block. And look, we're testing lower. So if we break the high of that, then I get to sell. I want to see a pull on at least this high right here. That's my trigger, a pull. I see a pull. It's a big bull candle. That means that it's going to sell off even harder to me. I like to see it break aggressively into a level because those tend to be the best rejections. Lots of volume, right? Aggressive push. Maybe I sell at the top. Maybe I do wait a second. I see a little rejection. I can put my stop like so, or find an iceberg and look to put my stop there, and I can put my target here, and I can look for a primary liquidity level, which is obviously here. A lot of people piled in here and here. Okay, and as price starts to fall, I can move my stop down a little bit. I don't want to get stopped out from spread because sometimes it makes 2 or 3 attempts. But maybe you put your stop a little bit higher. Maybe you do get stopped out. I don't know. Maybe, but you would have taken profits at this point. And that's a 17.2 to 1, dude. That's crazy. Right? And I've gotten these. Not every day, but like last Friday, I got a 13 to 1 trade and it took 5 or 10 minutes to hit my profit target, right? You have the liquidity building up here. You get an aggressive whip, aggressive push, and then it just fails right into it. All right, so let's say we kept our stop here. It's a 4.7 to 1. right? Drops, picks back up, you go, okay, maybe I'm just gonna like close out for break even. You know, all right, it broke out, close out for break even, and then you see that it's selling off here, and you go, well, shit. It's already selling off and it's breaking these lows. How, you know, maybe you could just take a sell. You know, all right, it broke the lows. It's failing, It's looking like it's gonna break through this level. You know what? I'm just gonna take a short here, and I'm gonna put my stop back above previous structure that had been resisted before. All right, because support becomes resistance. So now I get back into that trade, again looking for a target of the lows, and that's only a 2.3 out of 4. But as it starts to break down, what do? We move our stop up, and just like so, we have an outstanding trade, right? And on the 1 minute or 2 minute, you can have an even better idea of what's going on here. And this is the trade that I took. Again, I'll run over it one more time. This wasn't the entry I wanted, but I saw it sold off back underneath resistance. It pulled the liquidity, and then it went 1, 2, 3, 4. It's resisting it. So as it pushed the highs here, I sold and I put my stop above the highs. Not the best trade, a 1.48 to 1. If it had broken aggressively higher here, I would have cut half the trade off. I don't want to take a full loss. Right? If I'm risking 750 or something like that, as it pushes up like this, I'll probably be down like $400. I'll take a $200 loss. That's fine. In the event it starts to tank again, I'll add back in, and then I'll move my stops back to where it belongs, right? The previous pivot, and that's fine because it's going to play out over time. And as this does break and it pushes down to the 2-1, well, now I don't need to take a loss anymore, right? I've taken a quarter or a half of my position off, and now my stop is like this, or just break even, right? So it went from a 1.5 to 1 pretty quick on the break to a almost 4 to 1. And then as it starts to confirm, I just move my stop here, and now this is a 10 to 1 almost. And then just break even. And look what we're doing now. We've pulled liquidity on this. This is liquidity on the long-term time frame. First hour of London Open, and I'm looking for a correction and continuation back into the uptrend. However, we're in a downtrend right now. So I do not want to trade this to the upside unless I see one of two very specific things. And this is strategy 3 getting played out all over again right now, and strategy 4. So I will have the opportunity to take another short. This was the order block, and we retested it 1, 2, 3 times. Okay, so I'm going to delete this now and draw out my new target area to get involved. It is this area. I want to see price right now. This is a great time to buy. Come up, take this out, and I'm going to short again, right? And here we go. Trademark strategy 4. We have 1, 2, 3. We're running down a trend line, and we break through it and then break back into it. So on any kind of retracement, we can go long, put our stop under the body, target a push of this order block. As it comes in and taps it, we can turn right around and sell. And we can rinse and repeat this all damn day long and make money. It's the same thing happening over and over and over and over again. Look at this, good Lord, look at that, right? Order block, it hit it 3 times, right? It came down, tap, 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 broke out, broke in, you buy, you lose. You buy, and it comes in, taps in. 1 loss, 1 win, a great 3 to 1 right here, turn around, right? Rally, 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 sell, okay? Stop, target, okay? You get some profits, turns around, stops you out, comes back up into the primary, okay? You get a sell signal here, it breaks the low. So, okay, on a retest of these levels, or I can just chase, that's fine. It breaks here, I put my stop above, I target liquidity, okay? It confirms, I move my stop up, I take profits the first structure point, right? Maybe you get stopped out here, maybe you don't. That's a 4 to 1. You can get involved all over again. It starts to reject. Same situation, stop here as it moves and confirms, stop here. Okay, where's our target? Easy money, baby. Easy money. All right, guys. I'm going to draw this one order block trade area out one more time. Here we go. Boom, boom. Why? Because it tested, 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 tested. Lower tests. All right, so draw this out. Put the top of that one in there, just like so. If this interacts with this level, I will have an alert, and I will buy that. I'm sorry, I will sell that. Right now, this has run a little too much for me to be interested, but if I get a retest of the midpoint, so we'll say this is the first area of liquidity, if we get a pull down below this, I will get a signal, and I will go long if it looks good. Okay, that is strategy number 3 with a little bit of a strategy number 4, which is again, test, 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 break correction, strategy 4. Right, just like so. Boom, boom, boom. Strategy 4, strategy 3. All right, strategy 3 works out better, just FYI, but you can trade them both. Anyways, guys, thank you so much for watching my YouTube channel. I am, of course, continually trying to grow it. I love my audience. I love you guys. We're in this together in this crazy, crazy game that is an absolute nightmare. But if you're like me, you're passionate about trading and determined to make it work out, even though I want to smack my head against the wall most days, it's been a great learning experience, and I wouldn't trade it for the world. You guys have a good day.